For more on China's deposit insurance, I spoke to Leland Miller. He's the president of China Beige Book International. I started by asking him how this step is helping China's interest rate reforms.
Well, the problem with China right now is that there's no such thing as risk. So there is in theory, but if people are making investments, if they're putting monies in vehicles, they think everything's backstopped by the government. So part of what the transformation that the Chinese leaders have to do is convince Chinese citizens, Chinese households, Chinese investors that there's such thing as losing your money. And in order to do that, you need to start laying out what you're backstopping and what you're not backstopping. And so this is the first part of that reform.
So are there any downsides to implementing this system?
Sure. I mean, you saw a lot of opposition. This plan was essentially carved out years ago, but there was a lot of domestic opposition. Part of them were and this is not what is understood by most people who are looking at the issue, but a lot of the opposition was from smaller banks who actually feared this reform because they thought that by peeling away, the assurance that the government would jump into any bank, then you were looking at potential savers who would see large banks as better places to put their money than smaller and medium-sized banks. And so there's a lot of domestic opposition to this by people who think that they need that backstop and they'll be in trouble if they don't have it.
And do you think that the competitiveness for small banks would be increased by having this in place?
Well, in the medium term and long term, there's no question. I mean, one of the things that small banks would have an advantage of is they're going to know their clientele better. They're going to be able to price risk better once interest rates do go up. But in the short term, this is something that scares them a lot. They see that the government pulling back its guarantee of basic or soft implicit guarantee of jumping in anytime there's trouble. It's a real fear in the short term. But absolutely, medium term and long term, this is necessary and it's a good thing.
Now let's talk about the cap. It's 500,000 yuan. Why this number?
It's a nice round number. It's also 99.6% of investors that will cover their deposits. It'll leave out the richest of the rich, but that's not really what China wants to concern itself with. So the number's round. It covers just about everybody. It made good sense.
Now, in terms of how it affects the rich versus the poor, how would you say that is going to impact wealthy Chinese?
Well, I mean, wealthy Chinese can spread their accounts to multiple different banks and multiple different accounts. The richest will obviously not be able to backstop or have a guaranteed backstop for all their money. But then again, most of the rich are actually bringing their money out of the country right now, and an option that other people don't have. So all in all, I think the richest of the rich are probably going to be fine. This is something that's done in order to make sure that the middle class equivalent in China has some security for their long-term savings.
And do you think with this program that we'll actually see some of these wealthy Chinese bringing money back into the country instead of it flowing out?
Well, I think it depends more on the economic atmosphere rather than it does this particular reform. I think if they continue to see a slowdown, but the slowdown's positive, yeah, you'll see fewer capital outflows. But in general right now, the problem with China and investing in China and keeping your money in China is there's not that many ways to diversify your portfolio. You could put it in real estate, and that's not looking very good right now. You could dump it in the stock market, but we all know where that's eventually going. So basically, people with money have no choice in a closed capital account to try to avoid the controls and get out of the money, so that they'll have some sort of long-term security. And I think that by opening the capital account, that's really the only way you're gonna keep people in China that are rich long-term.
And as we look at people who are either in the middle class or hoping to elevate themselves into the middle class, how are they going to cope with these changes?
Well, I think that the most important thing is that they start looking at investments as risky ventures. And if they start seeing the fact that they can lose money on wealth management products, they could lose money in trust products, they can lose money if they invest their savings in the wrong bank or institution or individual, then this is going to be very good for China. But what it's going to cause is a panic at some point in the short run, because this is not what Chinese households and savers are used to. They're used to thinking that whatever happens, the government will step in. The government has to break that mindset if it wants to heal China.